Good morning.
Good morning.
Good morning,
How
Keith.
is everybody?
Good morning.
Good morning.
Oh, and it's June 10th already. We're a third of the way through June. It's amazing.
It is flying by.
No kidding.
That is for sure.
Oh, well, let's take a look and see what we got rolling here today. Take our trip over to CNBC. Kind of flat this morning. US and China are talking policy, and it's really, we've been talking that, major indices are just, and, the Mag 7s for the most part. There's a few bumps along the way, but sideways pattern, just kind of waiting when we come down. It talks about China. Treasury yields are down a little bit. What else we got? Anything else? Rolls-Royce may build the first small modular nuclear reactor, so you can take a look at that stock today. That's kind of interesting. But just kind of the same old boring sideways, waiting for something.
Testing.
Okay. Let's come over, take a look at the charts. Oh. So again, on the SPY, the Bollinger Bands have come together. We're going to open right about where we closed, kind of going sideways. Had a little bit of a trend up here recently. We're above the 200. So if you were investing and you used Paul Tudor Jones, you got in about here, you're still up. So his theory is still working on a daily chart. We have, flattish oscillators again, just sideways, kind of waiting to get back into something news wise. And maybe the China thing, the discussions, maybe they'll go good, and we see a big pop, maybe they go bad. We don't see that big pop, we see the opposite. That seems to be what we're waiting for. You see about the same thing in the Dow, kind of sideways, Bollinger Bands parallel, you're under resistance. You are just a bit over the 200. Okay, so this strategy, with Paul Tudor Jones, you would have been in, you would have been out, you've been in. That's the hard part about on a daily chart, especially when you get into, kind of a sideways pattern that, you'd be in and out. You'd have to kind of wait for a breakout, and I'm not seeing that yet on the Bollingers or even the oscillators, just again, sideways kind of patterns. And then the Qs, again, the Qs, same kind of looking on the Bollinger, sideways. Resistance to the top, we are above the 200. This would have been about the same as the S&P chart, because the S&P has a lot of the Mag 7s, just like the Qs. So the charts look the same, but just not much to play with there. Gold, gold just kind of been sporadically sideways. You can see that in the Bollinger Bands. The Bollinger Bands are plus or minus 2 standard deviations from the mean, which is the 20. And that's just what we're seeing. It's above the 200 on gold, so it's been a good run. It's had support at the 50, but again, we're hitting resistance and we're hitting sideways pattern on gold. Now, silver is a different world. Silver really took off. Okay, and it's 1, 2, 3. It's outside of the Bollinger Band. I expect some of that to pop back in at some point, but again, silver took off. We talked about that last week. Trent, what was it? Something about supply, or what was it that booted silver up?
The shorts against it were sizable, and basically you're seeing a short squeeze happen.
Okay.
Kind of thing.
So when the price goes up, the shorts have to cover. They have to go and buy, and that's what causes more demand. It causes price to go up, basically. Bitcoin's kind of decoupling a little bit from the major markets, and again, we haven't seen that broken market structure as far as trending up and down for Bitcoin. It's been pretty basic. Yesterday we had a big candlestick way above the 9. Our third day above the 9. We got across, we had a crossover, a golden crossover that of the 50 over the 200 a ways back, kind of went down, came back up. Again, you're seeing the same kind of Bollinger Band, but with this moving up, and then today we're at 109.5, just off the highs of around 112. We'll see what happens, but the oscillators, you can come down and look. We're having almost a crossover. Looks like we're gonna have a crossover in the MACD today. We already had one of the stochastic, and we're at 62 on the momentum indicator, the RSI. So look for Bitcoin to pick up a little bit. It's looking like it's going to, and we'll see where it goes. See if we can get the Bollinger Band to turn a little bit. But again, we see these patterns sideways up, sideways up, sideways up, and down, sideways, and up. And again, if it can break past all times highs, it might have an opportunity to run up. Bitcoin likes to go on 110s, 115s, 120s, those kind of things, both up and on the downside. Those seem to be big levels of support and resistance. But we came back. We were playing right along this support line that was resistance, and again, we're above it, but we're back in the zone where we were before, and it's going to need to break out above that. Of course, MicroStrategy still trying to get past resistance, and resistance is hard. Even with Bitcoin moving up, we haven't even crossed over yet. We're getting close on the MACD. We did a little bit of a crossover on the stochastic. So we'll see if that can get up and pass. Right now, it looks like we're going to open a little bit above resistance on MicroStrategy. I'll just do NVIDIA. NVIDIA again, right along. You're seeing the same pattern. This looks like the S&P basically, or the Qs. Same pattern, right at resistance. And you got sell orders right above that. We're going to open right below resistance on NVIDIA, kind of sideways. Google looks a little different. As I was looking at the chart, Google finally had a pretty good move past the 200, right up to the upper Bollinger Band. We're going to open right about above that. We're starting to see the oscillator. So Google is above the 9, the 200. The 9 is going to cross the 200. I got the 20 right behind that. So if the momentum holds up, you're at 64. You got some room on Google to run. So Google may be something you'd be interested in. We had dividends yesterday of 21 cents, and it still closed up. So that's interesting. PLTR. I'm not going to go through all the mags because they all look the same. Again, we're just hitting resistance. Right here. We've just been playing that sideways, and look how close the Bollingers are now. We just continue to go sideways. We're going to open up just a little bit lower. And again, not much on the oscillators. However, the stochastic looks like it's potentially going to cross, and that usually is a good indicator for the MACD. It's probably going to cross. If you like to play the momentum stocks, we had 9 of them on the list, and yesterday 7 out of the 9 hit the green line of resistance came on, which is what happens. Okay, on these you can run up a long ways, and then you get resistance. You still have sell orders above. Start to see the Bollinger move over. So again, I don't like to trade these. If you're going to trade them, try to get in at support and not at the top, because it'll run up between the band of support and resistance. We've seen that, and we'll see if this sticks. A lot of these can blow through here, depending on momentum. But right now, you're seeing resistance, on Roblox. I won't go through a lot of these. GE was another one that had come up. We've seen the Bollinger Band starting to roll over a little bit, which usually tells me you're going to see resistance. You're also seeing rollover on the oscillators. So just be careful. I mean, if you're still going to try to ride it, just show that the Bollinger is not moving, from lower left to upper right. It's kind of flattening out a little bit. So just be careful on those. We still have the 2 on TSSI still running. Again, look, I'm not sure I'd buy it above the Bollinger Band. In fact, I wouldn't. You want to wait and try to get it down lower. Try to get a better price if you're going to run momentum. You still have nice oscillators, getting a little bit of a roll on the stochastic. You got sell orders right above you. So if you play this, you got to be really careful, set your stops because they can reverse on you or can stop on you right away. Kind of like we saw in the 7 out of the 9 of the momentums from this week, and it's only Tuesday. The other one, ASPI, continues to run along the upper Bollinger. if you wanted to get, like, we put this on yesterday, certainly wouldn't want to buy it at the Bollinger, but look at wick down. And I always go back and look and see where I might have an entry. And I always look at where it opens or closes. And so this might have actually hit and we've been up. So you try to get it on sale if you're going to chase these instead of trying to buy it at the high, because at some point the probability is you're going to move inside that Bollinger Band, and you don't want to be caught with a high cost basis, and then all of a sudden you get the green line of death and you're out. We look at the under the 200, these more follow a trading plan. This is where we put it in for yesterday. You can see we're moving up along the Bollinger Band. So I like these that come down. Now we're over the 50, still have pretty good oscillators going. So that was up about 1.87% yesterday. We had EOG. I'm not going to go through them all. You guys can go see. EOG went up just a bit. We're still above the 50. We're still looking at the Bollinger Bands that are kind of soft and sideways, but we have some good oscillator movement here. So we could go up. If you play these, you can play it between your cost basis and resistance, the Bollinger Band, or you can try to go up where sell orders are, and take your couple percent. That's what we do when we swing trade. What else we got? We got FMC has been on our list for a week or so. FMC is still having a nice run. We popped in right about here, okay, when it came down and hit support, at the low at the 9, and we're up pretty good today. I think FMC went up a little over 3% yesterday. Just beware, you got some sell orders at 45.16. If you're happy with your profits on this swing trade, you might put half in, right around that area. If it goes up and hits, you're out on half, or you take the full profit and you move on to the next. But you look at the charts, it still looks like it can run, but you do have resistance, so you got to respect that. And LW was another one's been on the list for a while. We popped down, got it here. It's still just going sideways. Okay, you could have gotten out if you might have gotten out if you put in a limit sell right at support, which was the 9. It went down and tapped on it and came back up. Sometimes you put it just below it because you're still above cost basis. And again, we're going for bunts, singles, and doubles. So I'm not going for home runs on the swing trade. Some other ones that just kind of looked at interesting below the 200, Jack in the Box, a couple of days above the 9. Okay, got some good oscillators. You're below the 200, so use those rules. But again, you look at the oscillators, or the Bollinger Bands are starting to come together. You have some sell orders at 22.64, and then the next level is the 50. But again, it depends on your trading plan, your risk. It's not something that I want to really get into at this moment. I've been watching the ALB for a while. It's been going sideways, and finally you've gotten price action up by the upper Bollinger Band, and we've gotten past the 50, and you're going to see a golden cross, it looks like, of the 9 over the 50, and you have some good oscillator action. You got some resistance here, 64.53, but if you can move that and keep this momentum going, momentum's at 58, you might see some movement here. But again, we're right at the top of the Bollinger Band. Probably not somewhere you want to buy. If you're going to buy in, you buy in lower and try to ride it up. But again, we're still in a sideways. I like to see this get up and past here, and then you'd have some room to run. And then Lyondell has been another one that has been just sideways. It's trying to get over the 50. Just something
Mine needs to spray.
on the watch list. And then I'll do one more for the under the 200. Prudential. You see you got a lot of moving averages. You got the 9, the 20 crossing the 50, and you got some room to run up. Again, the oscillate or the Bollingers look just like we saw in the S&P. And again, you're right on where the sell orders are, but there's a little room up. Try to get it at the lower if you're going to get in on something like this and ride up and take your profits. On the watch list, we had EBX.
Do you have any type of swim shoe?
Yeah. Go ahead.
Okay. EXP, nice run up. After it hit over the 200, we got over the intermediate support level, and it's been running right up. Again, oscillators still look good. These were on the watch list. UAL, United Airlines, we looked at. Oops, that's not it. United Airlines. Pull this back over a little bit. Finally above the 200, and is able to keep above it. So it's riding the Bollinger again, try to get down a better price action, but you've got some nice, oscillators down here. Watch out for your resistance and your sell orders. And your resistance is up quite a bit, but UAL. And then along with that, you can go into the ETF Jets. Looks just like United Airlines. Okay, again, came up at the upper Bollinger Band. Oscillator's a little bit flat on this, but I'm just not finding all that much. Again, because the markets are basically sideways, it's hard to find them. So I'm showing you examples of if you really want to trade where you can go look at and maybe have a chance. Others that we're looking at, I know everyone's been looking at CoreWeave, and CoreWeave had a good day yesterday, but again, we came up and resistance is here at CoreWeave. And so it's really up to you and your trading plan. If you want to try to fight resistance, we did come up yesterday, but it did not get back to resistance. If you're using a trading plan, hopefully, and I was using mine, I would have gotten out when it hit, resistance, and I'd still be up over where it is today. It's going to open a little bit lower. It looks like this was about a half hour ago. I looked at where it was going to open. It might have changed since then, but again, watch these momentums. Resistance does mean something, but it's really up to your trading plan. Have a trading plan. When you get into something and you're trading, have an exit plan. What is your exit plan on a stock like this? Okay, or are you going to ride it forever? Well, it's not going to ride forever. This company doesn't even make money. Okay, negative 74 cents per share. So, just be aware of that also if you're a fundamental investor. UNH, we've been watching that, still just plugging along right here on the support level, still above the 9. Look at these Bollingers, man. They're going to hit, and I've never seen that, but it's really amazing. But we are seeing the 20 come and trying to roll. So, just a little more time with the stochastics has now taken a dump here. So we'll see what happens. But again, just kind of watch UNH. APLD, just a few more here. Again, APLD came up, played with resistance, came up to where you have sell orders for 3 days, came back down and hit resistance inside the Bollinger Band. So you had, basically 1, 2, 3, 4, 5 outside. And that's what I always said. It usually doesn't go past 5 and pulls back within. And APLD did that for us yesterday. We brought up Iran yesterday. Okay, I had a nice breakout. You've got some resistance above it. Bitcoin is, went up to 1.9, 110. Irene has some Bitcoin mining activity, and a lot of the miners saw this bump up yesterday. So just be aware. You have some resistance right above it. And what else we got? I'll just put up Casey because Casey is we brought it up a little bit. Casey had earnings yesterday, but today it looks like it's going to be up 10% in pre-market because they look like same store sales, store over store sales are going to be up. So you're going to see a little bit of a bump in Casey's today. So that's what I got. Sorry, trying to take a little more.
Hey, Mark.
Yeah.
Hey, Mark, somebody asked about AES. Did you cover that?
Nope. AES was on our under the 200 list. Okay.
Yeah.
So when you look at AES, it was, we were saying it has to be supported at the 50. Okay. It had a candle, but not a full candle. You can see yesterday it popped back down. I actually put a circle at the 50. And, what I try to do is I try to buy close to support and sell close to resistance. And so when I put in a buy order, it would be, probably at the 50 or around the 50. And had you done that, you would have hit and been up a little bit, on AES right today. I like the fact that the MACD is crossed over positive, the stochastic is positive, and you have, an RSI over 50. So the trend is definitely up. Yesterday, it tried to pop back down, got beat back up a little bit. So yeah, AES doesn't look too bad. Now, Bollinger's kind of sideways, but you got some range in here on the Bollingers. and you got a lot of support underneath. You got the 50, got the 20, and you got the 9 underneath as support. You got a ways before you have sell orders at 11.90. We closed at 10.88, so about a buck up from here, just on the next level of resistance. That's a good one. Thanks. I had that one looking at. Yeah. Anything else before I hand it over, Trent?
I think that was the only question about on the
Okay.
chat.
Well, we'll answer some more here in a second when you get done.
Yeah. So market breadth is something to take a good look at because it gives you an overall view of what the overall stocks are doing in the equity market. So what I have here in my chart is the 20, the 50, and the 200-day percentage of stocks over the different time frames. And what we're seeing is on a short-term basis, the 64% of stocks are over the 20-day. On the 50, 75% are over, and that's really positive. But on the 200, there's only 44, roughly just 45% as of yesterday's close of stocks above the 200-day. And as Mark has indicated, and I've talked about it, the whole Paul Tudor Jones, line in the sand is the 200-day, and you can really use that as a intermediate to long-term foundation of where a stock is going, or in this case, where stocks are going. And until we see sort of a break above, say, 50%, 55% of stocks over 200, you gotta question it. You gotta be cautious of where things are going. And what we want to see ultimately is, stocks under, over 55% of stocks over the 200. And that will give us sort of this baseline here of bullishness, and that will jump up these stocks. I mean, it'll jump stocks over the 50 and then 200, and that's what we want to see. What we want to see, I mean, ultimately, if we could get everything over 60% in unison and moving fast, that's when you're going to see a breakout. That's where you're going to see a move higher. When I look at the S&P 500, and I was showing Mark earlier, we are back in this channel on the S&P 500. So the top chart here is the S&P SPY, or it's the S&P 500 ETF, and then the below chart here is the VIX. And right now the VIX is in this zone below 19. It's in the investable bucket, and that's typically where we have a suppression of volatility. And understand what that is. When you have a suppression of volatility, that is the market maker world. That's where when you buy a stock or sell a stock or a commodity or whatever, there is a middleman in there who exchanges and makes a market for that. And he or she is required to hedge that book. So if we see the S&P 500 going up, they will sell future contracts against this to hedge out. That's a requirement as market makers. So what that does is it suppresses volatility, and that's when you see volatility fall. And when stocks sell off and you go off selling stocks, they have to buy future contracts against the S&P or their related benchmark. And that can oftentimes create this suppression of volatility. And that's what we're seeing now, is we're seeing this suppression of volatility. And so what's this going to cause? This is going to cause a headwind for, in this case, the S&P to go higher. And so the more and more we see the market S&P try to go higher, the more headwind it's going to have, because market makers have to do the opposite of what that index is doing to hedge their book of business. And as I was pointing out to Mark, since the election back on November 5th, we traded from November 5th through March of this year, early March 3rd, in this range between $585 and $610. And guess what? We're back in that range again. We have a suppression of volatility again. So we're in this period of really high resistance, this is like you trying to run across Nebraska and a westerly headwind is fighting you the whole way. That's going to do one of two things. That headwind is going to break at some point and it's going to subside and you're just going to rocket forward, or it's going to wear you out and you're going to eventually slow down, which I believe is what we're seeing at this point is a slowdown because in a way the market is getting exhausted. Now, a lot of people take the point of view that we're going to go lower again. We're going to go back down here and test the early April lows. And so they're getting short on the S&P 500 in particular. Now, what would cause a short seller to be right? And that would be a headline. And the biggest headline that could be in the works is the US-China tariff deal, or a headline of positiveness, which would then force those short sellers to actually reverse their trade, meaning instead of shorting, they're buying the S&P. And this could be that rocket that pushes that headwind or pushes the S&P higher, which would be a bullish move for equities. And that's where we could see the percentage of stocks below the 200 day moving average actually go back up over 50, 55, 60 kind of level. And we'd be back into a bull market. But right now, what I'm seeing is this sideways movement that we saw from November 6th to March 3rd of this year. And we're in this channel. And as long as we stay in this channel and this volatility stays low, your volatility or swing trading opportunities are going to go from big gains to really more smaller gains because you don't have that volatility expansion in any way. So this is a scenario I think we're in, and we may be in it for all summer long. I don't know, but a lot could change based on these negotiations between us and in China. Things could change when it comes to tactical warfare. It could be a lot, something could change this, but right now we're just sort of flatlining, in my opinion. So keep that in mind as we see this S&P move up. If we see right now S&P at $610 on the SPY, is that resistance level? A break above that could be really great for the long only investor, the short-term to long-term investor. But if we don't, we see resistance there and we come back down like we did. We saw resistance back in December. We saw it back in first of January, right in January, then again in February, and we moved back down. So this resistance doesn't eventually become support. Anticipate we'll trade in the channel until we break below it. So keep that in mind. And this is where your risk management process and policy really comes into place. And I've emphasized that over the last couple of weeks. Make sure you have, like Mark was saying, an exit strategy, an entrance strategy, have a risk management strategy. Because like we saw back in early April, we saw this market, the volatility just spike. And that's when things, NVIDIA, I think, went from positive to a negative, 18, 20 in a matter of a couple of weeks. So that kind of volatility could really upset everything in a way. So keep that in mind as you proceed forward and as we proceed further into the summer months. We want to see a break above 610 on the SPY, which is the S&P 500 ETF. And we want to see volatility stay below 19. That's more of a longer term investable market. So keep that in mind. If you're looking for chop, if you're looking for volatility, then that you want the VIX between 19 and 27. And we may get that, but right now we're seeing very low signs of that happening because of how market makers are hedging this and how and how the fact we don't really have any news headlines that is driving this. So that is my take on where we're going. Let's open up to the floor, and what questions and comments or ideas do you have today? Patrick, what do you have on your mind?
Good afternoon from London. My inside sources tell me Scott, Howard, and Jameson are having a tricky time with their talks, and because China have just played their ace card with regard to the precious metals. They're going to put an embargo on exports to America, and it means that the USA has only got 3 months' supply and will run out in September. So Trump may be into another taco moment to push it back till September. I think they may go into day 3 for talks.
Did you get that pass I sent you to get into that meeting, Patrick, as our press guy?
I did. As you know, Scott is my old drinking buddy, and he keeps me informed.
Well, we tried.
Anyway, I'd like to get back to your stock, Bitcoin USD. If you could get it up for me, I just wanted.
Sure.
There's some interesting pattern on there that looks fascinating.
Okay, hold on. Let me pull that up for you. One of my favorite charts to look at. Okay, got it.
Yeah, I want to just draw your attention to the bullish reversal candle pattern, the tweezer bottom. It appeared on the 5th and 6th of June, and it sometimes appears at the end of a downtrend. And if it stayed above the June 6th close,
Right here.
Hold on. Okay.
Hold on, Patrick.
Sorry,
go
Patrick.
ahead, Patrick.
Okay.
What do you think?
Yeah, right here you're talking about?
Yeah.
Yeah, well, I didn't hear. I was kind of interrupted. Say that again so I know what you're...
It's I believe it's called a tweezer bottom.
Okay.
And it's a potential reversal pattern, and it might lead to a breakout, because these patterns have happened before, and it seems to have obeyed the rule that it hasn't gone above the June 6th close, and so it does not breach the bottom made on the 5th and 6th. So that appears to be a reversal pattern.
I would say that just by looking at where we are today, you're correct.
Yeah.
And you look down here, and I look at the oscillators, and I'm seeing
they just crossed over.
Yeah. And you already had it on the stochastic, which usually is happens a day or two before the MACD. So yeah, it's going to be interesting, Patrick, to see how this plays out, because
if you go back to April, it's almost the reverse. If you go back to the bottom in April, it's almost the reverse of what it is now.
Exactly.
Yeah.
And I talked about let's see here. I was right back in this area. Let me move this chart over a little bit. That I told you, when I first started talking on the channel before we had the morning updates, it was right around 65,000, right in this area. And that's when I started talking more about Bitcoin on this channel. And I told you about my friends, and I told them, for $6,500, they could buy a tenth of a Bitcoin, 0.1. And if it went up to $10,000 or 6,500, went to $10,000. Well, now it's at $10,900. They're 6,500 for the ones that did it. And that was back in October of 2024. Okay. So that's even less than a year. You can see, but it's not for the faint of heart, Patrick, as you can see on this chart.
Yeah.
But I think now with the institutional acceptance and the U.S. government acceptance, and you're seeing a lot of sovereign funds in government, plus over 100 Bitcoin treasury companies that are spawning out after MicroStrategy has done it. I think you're seeing less of volatility, and I see that when I compare this to what I saw on the chop, during once Liberation Day was announced, and we had all that tariff disaster in the S&P, this stayed fairly, the market structure stayed fairly intact on Bitcoin. And now I'm seeing if we see this detach, and gold kind of hit a top. If we see Bitcoin detach, I think that a lot of money is now going into digital commodities.
By the way,
Go ahead. Go ahead, Patrick. You gonna say something?
I think he froze.
He froze. Okay. So I think you're seeing that, and if we can get past the high,
yeah,
you're going to see it roll a little further. Are you back, Patrick?
Yep. By the way, two other stocks on the coattails of Bitcoin, ETH and ADA. They're the Bitcoin, the blockchain stocks that look like poised for a stratospheric rise.
What's the symbols again?
E for Eddie, T for Tommy, H for Harry.
Oh, Ethereum. Yeah, Ethereum. Yeah. Ethereum.
And the other one is called. Yeah.
Ethereum's kind of, it's a weird. I have some Ethereum. I bought it way back when, before I knew what I was doing, and so I've kept it, and I'm up on it. This is actually the Grayscale Ethereum Trust. Okay. If you want to look at Ethereum itself, you put in the USD behind it, and you can see it looks just like the Grayscale. It's underneath the 200. Okay, it came up a lot because it was last time it was above the 200 really was in February of 2025, and now we've just popped over it again on Ethereum. And Trent, you probably know more about Ethereum than I do, for sure. I don't follow it.
Yeah, so it was sort of the child of Bitcoin, basically, and what it became, what it is a utility for which you can build applications on. And then it was sort of the first to do this approach, and it was adopted. The problem with it was its clunkiness and its slowness, and that's when you see other platforms like Ripple, XRP, USD, Binance, not much as Binance, but Solana and these other coins that have come out, and they have provided faster speeds versus Ethereum. But Ethereum has just got, it's like Bitcoin, it's got the bulk of the money. And it's interesting you're bringing up Bitcoin and the question of a potential reversal. Peter Brandt, who is a legendary trader as well, a very only technical trader, actually featured this morning on Bitcoin and Ethereum, both what you're pointing out with Bitcoin, possibly if you go back could see a reversal level, and Ethereum sort of setting up for a potential move higher. So it's interesting how these two are related, but I think Ethereum's more of it's a utility. It's a how do I build something, on how can I build, what platform am I going to build my product or solution on? And Ethereum was the first to do so. I just saw somebody asked about how to buy XRP. You'd have to do it through a crypto account like Coinbase or Binance or Kraken or something like that. What's that, Patrick?
You can buy an ETF too for Ethereum.
Yeah, but I don't know what the volume is on it.
It's the same as BlackRock has one, so it's pretty good.
ETH and ADA are due to go up by 400% according to some of the analysts at the moment.
Yeah, I don't know. I don't follow that. I just know that the difference, besides what Trent just said, Bitcoin only has 21 million available and there's very few left,
Yeah.
And so there's a supply issue with Bitcoin. And so there's no real inflationary factor to Bitcoin because they can't print more of it. They can't make more of it.
And then what?
And then what? It goes up because it becomes more valuable. When you have a low supply and a high demand, it goes up, right?
Yeah, typically. I'm starting to question that. We'll see.
Okay. Okay. Well, I
Well,
have a
We'll
different
see.
view because
We'll see. I mean, it's like, I don't know. Right at this point now, we should have been at 250,000 according to all the talking heads, right?
well,
Uh,
that's
not even
guesstimation, right?
not even close to any of that, and Michael Saylor thinks it should be 2.5 million of Bitcoin.
I think so, 13. Well, let's just go back here.
Just,
In
you
December,
know, and then,
December
wait
of
a minute, let's go through my next argument. We
in
just
December of 23, it was at 41,000. Now
I
it's at
heard that the
109.
last Bitcoin was going to be sold in 2060. So we got a lot of
2040.
time.
Well, but the halving rate goes down
yeah,
every
the
4 years.
halving. Let's talk about the halving. At the halving, it was supposed to shoot up to the 150,000, right? It never even came anywhere close to it.
Yeah, but based on who, Bob? Talking heads, okay, okay. So
Talking
where's the
on
video?
talking
Where's the video
the
gonna
guys
be?
that been in forever,
Where's
right?
the video? Where's the video gonna be?
Well,
$1,000 based on somebody's estimation? I don't know.
right.
All I know is I can go look at the history. Okay, and this
What
is the best
I'm
performing
not.
asset.
I'm not. Listen. I'm. I'm not against Bitcoin. I just question some of the projections for Bitcoin. That's all.
Yeah,
Okay.
yeah. I
here's
don't.
I'm
here
not
here's
questioning. I'm not questioning. You know, you've never said, it's going to hit this number or whatever it is. I'm not saying
No,
that. I'm just saying that there's a lot of hoopla out there that this thing's going to, hit some crazy and everybody's going to become multimillionaires. Yeah, those happened already. It's over, because most people can't afford $100,000 coin,
but you don't buy 100,000. You could buy $1 worth if you want.
I know that, but
Yeah,
that's
but most people don't.
I rather take that dollar and put it into a good stock at this point because I'll make more money.
Yeah,
here's
you may, but
something.
I have a different view of it, and I
I'm
have a
not
different
against
result.
it. Again, I'm not
Yeah.
against it. Even though I
Yeah.
got scammed, I'm not against it.
See, and if I got scammed, I would be very leery of it too. But it wasn't Bitcoin that scammed you, right?
No, you're right. It wasn't Bitcoin. It's never the actual product. It's the person.
Right.
Here's something to look at, think about.
I'm looking.
What it 75 was it 75% of Bitcoin is been taken off the market and has been for a long time. Okay. Now you got these institutions who have ETFs who are forced to go buy it now. So that sucks more supply out.
Yeah,
At what point is there
that only
no
brought it up, Trent.
supply?
That only brought it up
No,
25,000, Trent.
okay, no, my question is at what point that supply becomes so minimal and the volatility or movement in Bitcoin becomes so subdued that people go, and they move on and
Right,
it flatlines.
right.
Okay, and that's where I look at this and I go, okay, maybe
Good
the
point.
worst thing that could have happened to Bitcoin was that BlackRock came out with an ETF on it. Maybe because now it gets 1 day's worth of movement or 2 days worth of movement, everybody's flooding into it, right? So they're forced to go buy it. Well, the more supply they buy out, the less potential for movement. And since they don't manufacture more shares like a stock or equity, at what point do you just go, people lose interest because we're such a fickle society? We want the next, I mean, if you bought Bitcoin in 2013, okay, you're a multi-billionaire. If you just dumped your whole paycheck into it. But right now, look at where we're at and the ability to go higher. You would just have to have a massive
There's
shift.
resistance to go higher. And
And
Well,
it's not a technical resistance, it's
no,
a
no,
ability
mental
or
resistance.
a
if
supply resistance.
if supply wasn't limited at 21 million, I'd say, yeah, we wouldn't be where we're at today. But what I look at, Bob, is I back out and look at the bigger picture and I see what's happening to the US dollar. You put the US dollar against Bitcoin and you see that the US dollar is devalued way more and the Bitcoin has increased in value.
I don't disagree with you on any of these technicals that you're bringing up. I mean, here's the bottom line. A lot of people got hurt from all the scams out there when it comes to Bitcoin, and they're still happening today. Okay. And to get people to move back into it is going to be very hard. And I think that's the biggest thing. Everybody's very cautious. And today, even if you take it off like I do, I take it off the market. Got my key around here. Yeah, here's my key. I keep the key, right?
You're talking about the
somebody's going to come up with something that takes it off that card, that key.
Well, maybe, I don't know, but I don't think so. But you're talking about the retail guy may be scared to get in. I agree, but the retail guys,
you need
the real
them.
guy, no, you don't anymore. Here's
do.
where right here is where institutional started. This is when the ETF started, right here. Okay, the retail guy is pretty much done with Bitcoin. They got in way, the Bitcoin cowboys, they got in way back at the beginning, Bob. And they've made their money. This is all institutional buying. This is not retail buying. These institutions and companies are buying. They're buying several hundred to thousands of Bitcoin at one time.
I'm with you, but I'm not with you.
Okay, that sounds like a bad marriage. With me,
I agree.
Listen, I like Bitcoin. I love the utilities of Bitcoin, how I can use it, how I can bring it with me anywhere, and I can send it anywhere without the government involved. I love all these things. However, there is still this big gray cloud over Bitcoin.
Well, I think if I got scammed, I would feel the same way. I really do. But I think you can get scammed with your bank. Go try to take $100,000.
You are getting scammed with your bank.
Try to take $100,000.
I don't trust my banker.
Try to take $100,000 out of your bank. How long is that going to take?
I don't trust my banker as far as I can throw him. He's a big guy, and I can't throw him very far.
Just saying.
So Bob,
Bob, guys.
Yeah.
So for those of us that may not fully understand a little bit of the background of what you're talking about there, what happened? I mean, something obviously negative happened for you with Bitcoin, and maybe as a kind of a case study for those of us that don't know that much about it, what happened that you got took or something?
So it's not Bitcoin in itself. I was investing my a portion of money, a lot of money actually, around 250,000 into Celsius. If you heard of it, you heard of the Celsius FTX scenario. Well, FTX also scammed people too. Celsius, Alex Majinski, and I don't want to hold this whole thing up for this, but he basically scammed everybody that put their money. He was using it for personal. He was investing it through the back door. In other words, off ledger. They had a off ledger loaning they were doing with it to hedge funds that were supposed to pay up. When the market fell apart, they didn't have the money to pay. It brought the company down. Okay, so people like me, who I lost 250,000. Of that 250,000, I got about 50,000 through the bankruptcy back. Okay, so I lost $200,000.
Wow.
It's not going to kill me, but it's still a lot of money, and I don't forget.
Right.
So that's
right. Okay. No, that helps.
He goes to jail in September. He's been sentenced to jail. He's going to do 12 years for that. To all the people, but that's nothing. I mean, he put families, people invested because of the Bitcoin craze, right? He got people to invest their equity in their homes, lost homes, and things like that. But for me, it's lost money. I'll go on. Okay.
Bob,
but he destroyed people.
I would say that the financial markets did the same during the great financial crisis when they went off with their derivatives and everything and crashed the housing market and people lost houses. You were there, but you lost there too, right, Bob?
That's right.
Yeah. So it's not Bitcoin, it's the financial market in general you got to watch out for.
So, yes, I agree with that, but that was not a scam. That was the
It was
difference.
too a scam because
Well,
they were playing big companies were playing both sides of the ledger against the little guy. They were playing longs and shorts,
yeah, but
and no
I
one went to
wasn't,
jail.
I wasn't in that situation. The economy fell apart. And that's what happened. It's like any business in a bad economy, if you don't handle it properly, and that was my licking. But at the end of the day, that was for me, it was not a scam. But yes, I know that they were scamming with those mortgages. They were scamming people. They give a mortgage to anybody at that time.
Yeah. And when the economy went down, and you look at today, I look at the same kind of scenario, only in a borrowing and debt cycle. That if our economy turns and tax revenue goes down and interest rates stay up, we won't be able to pay this debt off, and we could be in the same situation as the
We
great.
are in the same thing right now. I've been telling you this for a while. I'm in the
Well,
business.
we've been in agreement.
We are in a recession, no matter what they say.
No, I agree. I agree with you.
It
And
hasn't
I think we're
turned.
heading to stagflation. Actually, I've been saying that for a while.
Bob, I would argue with you because of my half an hour spent in Walmart yesterday.
Yeah.
Um, I posted on the Discord, but the parking lot in Walmart was full. Like to find a parking space, you went over to Target across the street and parked in their parking lot. So going
Why,
back,
why
It's
is that?
empty.
it's empty.
Right.
Because
That's a
the
sign of
Target parking lot
recession.
was
Where do
empty.
people go? They trade down during recession.
Dollar
Absolutely.
General, yeah,
They
Dollar
absolutely
General
do.
too. Yep.
Yeah. But
They're
what
not going
I
to stop shopping. You still got to buy food. You still got to buy things to live, but you trade down. You know, look at Lululemon. They're not
No
buying
doubt.
Lululemon pants.
all right.
I never bought them before. I thought they were a little strange.
Oh, they're so
I
comfortable,
don't
Mark.
own
You
a
should
pair.
try them.
I don't own
They don't work on
a
the farm very. They don't work on the farm very well. They get caught on the tractor, when you get off.
I
One tractor.
do think.
So since you bring that up, did you have you watched the show on Prime, the Clarkson Farm? You want to laugh your
Yeah.
ass.
Oh yeah.
Season 4 is out.
Oh, it is.
Yeah, I watch it. It's amazing. But yeah,
Well, it gives you insight to what farming is all about and how heartbreaking it can be.
how the country or state or town is totally
Oh,
against
yeah.
farming and the farmers and one rainy season and they're done, right? They
Yeah.
they can't harvest.
Yeah.
Yeah,
But it's a good show because they put a comical twist to it as well.
Yeah, he's funny.
Yeah. Oh, he's
I
yeah.
live right in the middle of it, so I live it with my
Yeah,
neighbors.
you live it every day.
Every day.
Yeah.
Yeah. Yeah. But
But
I do think
it's a very high tech business, agriculture now, that most people don't know either.
Yeah, no, I learned that too about John Deere and the equipment getting it
Yep.
fixed. Well, they call that a scam too.
Why is that?
Because when the John Deere goes down, you need to be able to have the computers to repair the equipment and understand what's wrong with it,
Right.
right? Just like a BMW,
Yeah,
right?
exactly.
And,
Yeah.
and a farmer, is not really used to doing that. A farmer really just wants to find out what's wrong with his tractor and get it up and running because they're always tight.
But I think that
Sunshine, no rain,
from what I've seen and my experience around here, you have to you have to expand and grow with the economy and the technology, or die, or be left behind. And that's
like anything.
like anything. I mean, we're not pulling plows with horses anymore around here anymore.
Right.
And so if you want to, we have John Deere dealers, and you see them out in the fields with their little computer shit, and they come out and they'll fix it. It's going to cost money, but we have adapted.
Yeah. But
there's no telling though, Bob, the productivity we got off these new tractors that can test soil moisture, fertilizer content, a yield right at that moment, send it to a computer. So when you get home out of the field, you can analyze your fields and plan for next year.
right.
Yeah.
I know that there's a lot of pluses, but it's interesting.
Yeah.
You have a lot of farmers. You have a lot of farmers, the smaller farmers. You know, they're struggling with it, and
Yeah, less. You're right.
people
And
struggle. You know, older people struggle with a desktop, right?
yeah, there's less and less of that. Smaller farmers, because as they die, the heirs either don't want to farm or they can't afford the inheritance tax.
Right,
You know?
right.
Yeah, we're coming up with that. We're coming up with that with Jan's parents are 96 and they have a pretty good sized farm. So we'll be dealing with that later, I'm sure, at some point. But you're right. I mean, it's like anything. It's not just farming, it's manufacturing. If you're not using robots and you know systems to make your process better, your costs are higher and you won't be able to compete. You know that, Bob, probably.
I do.
Yeah.
In my warehouse, you know, we automated it for most part. You know, we didn't go to phase 2 yet, but phase 1 brought my warehouse from 20 people to 7.
Yep.
Wow.
Yep. And that's my good friend. He's a big farmer, and he can now clear 100 acres with 4 guys where it used to take him 20.
Yeah, exactly.
Yeah.
Yeah.
And that's how you got to do
Uh,
it, or you can't compete.
That's right.
Yeah.
Just the way it
I-
is.
Well, Trent, your brother-in-law is the same way out in New Orleans, right?
Yeah, he's actually in he's got 2 manufacturing facilities, one in Lafayette, Louisiana, one in Alice, Texas. The largest one's in Alice. And prior to the pandemic, I think it was 2017 or so. Well, 2014, he was, the oil industry started tanking again. And he was forced, to start looking at how do I replace 450 employees in the Alice location. And he started adopting to robotics. He's now, I think, down to 150 employees. And a lot of it's, robotics and that kind of thing. His goal is to get the company below 100 employees because of what they're doing with robotics. But he has hired a robotic, basically created an internship, which I thought was genius, with the local, was it the Louisiana State University, I think it is, in Lafayette, and created a internship for robotic engineer development. And his first round of people, he hired every one of them, and now they work full time building out a robotic system so that they can run 24/7. And it's really cool what they're doing. I mean, for a small company, um, he's basically increasing his profit margins and reducing his liability, which is a big thing in the oil industry.
Well,
But
that's
yeah, it's
always the goal.
yeah.
So my
Well, and I
question
think
is, go ahead. I'm sorry, Trent. Go ahead.
I think that's the big thing when you look at a lot of industry now with artificial intelligence and what you can do with it. I mean, you can build a company, uh, based on what large language models can do for you, as long as you're willing to do the work and curiosity to go discover what it is. How could I go to Bob's business and say, hey, I can create more efficiency here and more profitability, which is the bottom line. And I can, how do I do that with artificial intelligence? And I think that to me is really where all this is going. The problem is most people aren't adapting to it, you know? Most people coming out of school are not adopting what's happening here. So yeah.
The problem with that, it's really twofold. Number one is a lot of companies. Let's take my industry. My industry is antiquated for most part. It is getting better, but it costs money, right? I mean, I've sunk hundreds of thousands of dollars into technology. And I'm still not where I want to be. So, and that's the problem, right? You have to either borrow money or have the money. The ones that have the money don't really want to spend it on technology because a lot of the owners of companies like mine are heading towards retirement soon. And so they're saying, well, what am I going to do? I'll sell it the way it is. Then someone comes in and buys it because there's a lot of buyers out there for our companies right now. And they say, well, I'll just sell it to them and let them bring it up to snuff. And that's what basically happens. And then they roll up the company. They just take their customers, roll the company up into their other company, and then have a store in that location. Change the name. But that's really what's happening. So a lot of people are after my company because it has all the technology. It's ahead of the game. I get offers every week, but I don't take them because I know what I have. So I think that there's a lot of, now I can start acquiring companies next year when I start to see things turn around. I won't do it now, but I'll do it probably next year.
Yeah.
Yeah.
Smart.
And I'll just put my technology into that company.
That's how you do it.
I think you see that in the financial advisory world. The majority of financial advisors are over 50 years old, and there's not young people coming into the business because of the tarnished Wall Street name. It's the evil empire, and yet from a opportunity perspective, if you wanted to go out and acquire advisors, you could spend, as long as you had the capital to do it. It's exactly what could happen there, and it could be a moneymaker, but at some point that runs out as well. But yeah, I think there's a lot of probably industries like that, the law industry, the accounting industry, where it's
Man, there could be
nobody
some
wants to get in.
courthouses. Let's clean that up. Who
What
wants
is
to
it?
spend time going to court for a ticket?
Yeah,
I spent 3 years of my life just going and acquiring small little family discount brokers back in the day. When the internet first came out, I did that for 3 years for a big company here in Nebraska, and we just bought up accounts and brought them in and used our technology was so much better. That's how we grew the business, Bob.
Yeah. There's a lot of money to be made there.
Mm-hmm.
But I think that's throughout many industries, and there's a lot to be a lot of companies to be picked up that need to be streamlined.
yeah. Well, and it's a great opportunity if you think about it from a business perspective. If you have the wherewithal technology wise and to scale a business or to go into a business that's sort of, what is that, analog, and bring it up to today's possibilities. I mean, shit, there's a lot of opportunity in that. That's a whole new business.
The other thing is a lot of these companies didn't build a presence on the internet, and they're struggling with that. That's another situation, and I built the presence on the internet 12 years ago, so that's a big difference.
Yeah, that's the key. All right, we're market's open and fun-filled day ahead. So I'm gonna get to it. Y'all, thank you again for participating, and we'll be back tomorrow, same time, same place. And we'll have a good one. See y'all
See you
later.
later, everyone.
Have a good one.
Patrick, get over to those Chinese U.S. meetings.
I'm gonna go get some Bitcoin, Mark.
Patrick, take
I'll
care.
buy some today.
Yeah,
I'll
take
buy
care.
some for you today, Bob. I'll put it in my special account, the Bob account.
Bye.
See y'all later. Take care.
See you guys.